Dear students, welcome to our channel. In this video, let us discuss few practical problems in the Accounting for Partnership Firms Fundamentals Chapter 1 for CBSE Class 12 Accountancy. In our previous video, we discussed few basic concepts. I have given the link of that previous video in the description. You can have a glance over that video. Now let us start discussing few basic problems in this chapter. Next question. Here, this question is based on the concept of past adjustments. That is, during the particular financial year, the partner's interest on capital or interest on drawings or salary, commission, such things might have not been given an effect in the books of accounts and the financial statement might be closed. And once the financial statements are closed, considering all these adjustments, all these transactions, a adjustment entry is to be passed. So that is the idea of this question. So past adjustments after closing books of accounts. Now we are given with a question about the partners A and B in a firm sharing the profits and losses in the ratio of 3:2. We are given with the balance sheet extract and some other details are given. Now, as usual, let us break down the question details. A and B are partners. A and B are sharing profits and losses in the ratio of 3:2. And we are given with the balance sheet as on 31st March. And also, we are given with the profits for the year ended 31st March 2023. And this profit was divided between the partners without allowing interest on capital. The firm did not allow this interest on capital before and they closed the accounts, books of accounts. And also salary to one partner was also not allowed. Without allowing this, both the aspects that the profits were distributed. Now we have to make the adjustment entry, prepare the adjustment entry, and we are also given with the details about the drawings of two partners they withdraw during the year, Mr. A and Mr. B. We are asked to prepare the journal entry and show the workings of this calculation. To start the workings, firstly, we have to prepare a statement, working note 1, that is estimation of opening capital. In our previous video, we discussed a lot about how to estimate the opening capital. This statement starts with noting down the closing capital. The closing capital of partner A is given as 60,000 and for B it is given as 20,000. And with this, we will add the drawings. If this money is not drawn by the partners, it would have been with the remained in the firm. The drawings amounting to 10,000 for partner A and it is 20,000 for partner B. This is to be added. So it works out to 70,000 and rupees 40,000. We have learned this format in the previous video and we have to deduct the profits already credited. The profit already credited is to be deducted. That is rupees 30,000 was credited in the ratio of 3:2. This amount was credited previously in the ratio of 3:2. So dividing this value, it is 18,000 and rupees. It is 18,000 and rupees 12,000. Making an adjustment of all these things, we arrive at a capital of rupees 52,000 for partner A and 28,000 of partner B. So this is the capital in the beginning. Now we have to make the another working note. This is working note 2 for adjusting the past things, that is interest on capital. This is the adjusting of interest on capital and salary. Adjusting of interest on capital and salary. Past adjustment. Now, these partners are entitled for an interest on capital. That is, the partner is entitled for an, I am zooming for a better visibility, interest on capital, and the partner is entitled for a salary, partner A, salary to Mr. Partner A, salary to partner A. This the company should have given before, but they have not given this. They have not considered this transaction. They should have given. What is the interest on capital? Interest on capital is given in the question as 12%. It is the opening capital of A is 52,000, and in that if you calculate it is 6,240, and in this case it is rupees 3,000 for it is to be credited to the partner. That is, it should have been given, so it is to be credited for partner A, and here it should be credited to partner B. The interest on capital they should have given. When a partner receives money, they will get the credit, and partner A is getting a salary of rupees 1,000 per month. 1,000 per month for 12 months. Partner A is getting a salary. He is to get a salary. He should have received before the distribution of profit. So the partner A is supposed to receive on an overall 18,240, whereas partner B is supposed to receive an amount of 3,360. This is the amount that they should have received. If they are to receive, they get a credit in their account, and it becomes a debit in the partner firm's account. So debitor, it is debited, and here it is 12,600. Sorry, 12,000 for partner. So totally the firm should be debited with the 600. This is the total of the interest on capital and the partner's salary, which they have not given. Without considering this 21,600, the entire 30,000 annual profit was distributed to partner A and B. That money is to be received back from the partners. They have to give back to the company. It is in the ratio of this 21,600 is the total money they should have received as an interest on capital or salary, which was not given earlier, and that was included in the profit and it was distributed. Now they have to surrender back this. So amount to be debited, that is debited from partners, for the reason that because they have not given the interest on capital and salary, this money was already included in the profit. So they have received a portion as a profit, which in the ratio of 3:2, they have to get it back. That is rupees 21,600 in 3:2 is to be debited from each partner. When you divide, it is for partner A, it will be rupees 12,960, and for partner B, he will receive rupees 8,640. If they are to give to the company, it will be a credit for the firm. If the account of the individual partner's capital account is debited, it is a credit for the firm. That is 21,600. So the firms get an equal debit and credit. Now partner A is to give back the money 12,960 to the firm, and he has to get 18,240. That is 18,240 minus 12,960. Partner A is to get an amount of 18,240, and he has to surrender back 12,960. So the difference amount is rupees 5,280. Since he is supposed to receive the money from the firm, this amount would be credited to his account. And in case of partner B, he has to give rupees 8,640 to the firm, and he is supposed to receive only 3,360. In this case, he has to pay back the money to the firm. That is, the difference amount is rupees 5,280. This is the amount the partner B has to give. So it is debited to his account. Now we have consolidated the interest on capital and the partner's salary account, and we found out the adjusting entry. B has to be debited and A has to be credited. Now we are making the journal entry for the adjustments. It is as on the date of 2023 31st March. The person who is getting the debit is B's capital account. B's capital account data, and A has to get a credit. A's capital account, he has to get a credit, being adjustment entry for interest on capital and drawings. The amount is rupees 5,280 and for both 5,280. This is how we make the journal entry, adjusting journal entries. Next question. We will discuss one more question in the related to the past adjustments. That is without value, the profit has been distributed without considering the interest on capital, interest on drawings. We are given with a question about partners, three partners E, M and A, and we are given with certain details. To start working on the question, as usual, what we will do is we will divide the question details into small hints. On 31st March, the capitals of E, M and A, the three partners, were given respectively as 1,60,000, 1,20,000 and 80, and the interest on capital, interest on drawings had been omitted. That is, interest on capital and drawings had been omitted. Then the profit for the year, it was given as, the profit for the year was given as 40,000, and during the year the drawings made by the two partners E and M withdraw a total amount of, you have to read the question carefully, it is the total amount in equal installments at the beginning of the each month. Here they have not withdrawn the money every month, they have withdrawn the money at equal installments at the beginning of the each month, but amount given is for the total year. You have to read the question, else what you will do is you will be multiplying this 24,000 into 12 months. It is the total drawings that has been given in the question. And the another partner A withdraw at the end, this person at the end of the each month. The next partner has withdrawn at the end of the each month, and we are given with the interest on drawings. Interest on drawings is 5% and interest on capital is 10% we are given, and this partners, they share their profits and losses in the ratio of 2:1. We are asked to pass the necessary rectifying entry after making some working notes. These are all the things that we are. So as usual, to solve the problem, first we will start with the working note 1. The working note 1 is estimation of opening capital. Opening capital, estimation of opening capital, and we have discussed this many a times about the format. That is, this opening capital estimation starts with the closing capital, and for three partners it is given as 1,60,000, 1,20,000 and 80,000. As usual, what we will do is we will be adding the drawings made by the partner, which has been already given to made by them, 24,000. It is given as a total amount. It is not per month. You have to read the question carefully. 48,000, the total drawings made. It is added. If they would have not withdrawn, this money would have stayed with them in the as a capital. So 1,84,000, 1,44,000 and 1,28,000. With these, we have to deduct the profits that has been already credited. The profit already credited. This profit is been credited without considering the interest on capital and interest on drawings. The profit amount of rupees 40,000 is being credited, and it is credited in the ratio of in the ratio of 2:1:1. It is given in the question, 2:1:1. It is credited in this ratio. So when you divide this 40,000 in this ratio, you get 20,000 and 10,000 and 10,000. So this you deduct. This will from this we can arrive the opening capital of the partners. That is, for the first partner it is 1,64,000. For the next partner it is 1,34,000, and the next partner it is 1,18,000. And in the question we are given with interest on capital at the rate of 10%. It is given. So every partner's interest on capital, for the first partner it is 16,400, for the next partner it is 13,400, then next partner it is 11,800. We are calculating 10%. So the total interest on drawings, that is, we add all these things, all these three partners interest on drawings. It is, when we add these, we get an amount of 41,600. It is the total interest on drawings for all the three partners. interest on drawings 41,600. The next working note is about the estimation of working note 2 is about the estimation of interest on the previous working note is about interest on capital. This is interest on capital. The next working note is about interest on drawings. It is, we are given with the question in the question that partner E and partner M had made a total drawings of rupees 24,000 each at the beginning of the each month. That they made a total drawings of 24,000 at the beginning of the each month. So the formula, interest on drawings, they made it at the beginning of each month, 24,000 each. So the formula for calculating is total drawings into rate of interest into 13 divided by 24. So the total drawings for each partner is 24,000. Rate of drawings is 5%, that is into 5 divided by 100 into 13 divided by 24. So we get a rupees 650 each for each partner. Then next situation is partner A. This person made a drawings. Partner A made a total drawings of rupees 48,000, but he made at the end of partner A made the drawings at the end of each month. So there is a change in the formula component. It is 11 by 24, and the amount he has withdrawn is the total drawings is 48,000. So 5%, 11 by 24, his total drawings is 1,100. This was the total drawings made by interest on drawings of A. Partner A's interest on drawings is 11,100, and partner E and M's interest on drawings is rupees 650 each. Now we are to calculate the total interest on drawings made by all partners. That is rupees 650 plus rupees 650 plus rupees 1,100. That is the total interest on drawings is rupees 2,400. Total interest on drawings. Now making the third working note, that is working note 3. This is the adjustment table. The third working note. Here I am zooming for the better visibility purpose. Yes. Now the interest on capital. This was not considered before distributing the profit. This should be given to the partners. Interest on capital was not considered before distributing the profit. The interest on capital we have calculated in the above working note 1. It is 16,400. This should have been given. So the partner will get this amount in as a credit in his capital account. Partner A, partner B and partner C will get this as a credit in their amount. And interest on drawings. This is a money receivable. By the firm. This should have collected from the partner. That is, this should have been collected from the partner means their capital account should have been debited. For partner E, it is 650, partner B is 650, and partner A, it is 1,100. We have made these estimations in the previous working notes. Now, the interest on capital credited, that is, it is to be given to the partners. That means this total amount is to be debited to the firm account. And interest on drawings is to be debited. That is, the partners are supposed to pay. That means the firm will receive this money to the extent of 2,400. Now the firm's total receiving of money is 41,600. But sorry, the firm has to give 41,600 to the partners, but they have got only 2,400. The difference amount of 39,000, this 39,200 was included in the profit without considering interest on capital and interest on drawings. They have not given the interest on capital and received interest on drawings. Without considering this component, they have distributed this 39,200 to the partners. Now they have to get it back from the partners. That is, the firm will be receiving this amount. That is, the partners account has to be, they have to get received to be collected from partners, to be collected from the partners in the ratio of 2:1:1. What amount? That is the amount of 39,200 rupees. 39,200. This should have been collected from the partners, because this has already been distributed to the partners, and this is to be collected from the partners. 31,200 in 2:1:1. That means collected from the partner means the partner's account will be debited. That is, for partner E it is 19,600, partner M it is 9,800, partner A it is for partner A is also 9,800. So overall partner E's account is to be totally debited with 20,250, and partner E's credit is 16,500. What this means is, partner E is to give to the firm 20,250. He is entitled to receive 13,400. That means he has received extra than what he is supposed to receive. So what will be done? It is, he has received excess money than what he is supposed to receive. That means the difference amount 20,250 minus 16,400, the difference amount of rupees 3,850 is to be debited. He has to return the excess money what he has received. In case of partner M, he is to be debited 10,450 and he is to be credited 13,400. That is, this person has to be given 13,400 and he has to return 10,450 to the firm. That is the difference amount rupees 2,950 is to be credited, because he has received in short than what he is supposed to receive. So he is to be credited with 2,950. And in case of partner A, he is supposed to receive 10,900 and he is supposed to receive 11,800 and he is supposed to return to the firm 10,900. That means he has received less than what he is supposed to receive. That is 10,900. So the difference amount of rupees 900 will be given to him. That is, when he is receiving, his account will be credited. So this is how the debit and credit for partners E and M and A is estimated. Now we will record this in the journal. This value is to be recorded in the journal. Adjust journal entry. Journal entries, and we are credited with the, that is, E's account, E's capital account is debited to the extent of rupees 3,850 and M and N's account are credited. That is, they are supposed to receive to M's capital account and to N capital account. These two persons are supposed to receive the money, that is 2,950 and 900. So this is the adjustment entry. Adjustment entry made. This is how we finally calculate the amount to be adjusted to the partners. Next question. Again, this question is also about the past adjustments. We are given with the question details about the three partners and it is said that they are maintaining the capitals on fixed capital method. That is, they will be applying two capital accounts. One is the capital account, the other one is the current account. Now, as usual, to start working, let us break down the question details into small hints. X and Y are partners in the firm and their ratio is 5:3:2. They are sharing the profits in the ratio of 5:3:2 and their fixed capital. That means they maintain two accounts, fixed capital and the current account, and it is as on 31st March. And it is also given that interest on capital was credited at 10% instead of 8%. So this is the central theme of the question. That is, interest is made at 10% instead of 8. That is, an excess interest was given to the partners. We are asked to make the working notes and prepare the adjustment journal entries. This is what we are asked to do. As usual, to start working on that, first let us start with the working notes. Working notes. This working note is to estimate the adjustments to be made. Estimation of adjustments to be made. What is the situation given in the question? The partners are being wrongly credited at the rate of 10%. That is wrong percentage. Wrong percentage is 10%. But the correct percentage is 8%. And what happens? That is excess 2%. Difference between 10% and 8%. Excess 2% of interest on capital was given to the partners. Excess 2% was given to partners. So this has to be taken back. So this excess 2% is to be taken back from partners. Is to be received back from partners, and this amount is to be distributed in the profit sharing ratio. In profit sharing ratio, which is given in the question as 5:3:2. That is, the excess 2% is to be taken back from the partners, and it is to be distributed in profit sharing ratio. This is what we are going to do in this question. Let us prepare a table for this, and we are given with a capital. That is, for the first partner, the capital amount is 3 lakhs, and the next partner, the capital is 2 lakhs. The next partner, the capital is 1 lakh, and excess 2% interest, that is interest on capital, is to be received back from partners. This is to be received. 2% on 3 lakh is the part 6,000, 4,000 and 2,000. This is to be received back from the partners. That is, their account will be debited with this amount. And totaling this amount that is to be received back from the partners, it comes to 12,000. And this 12,000 amount is to be given back to partners in profit sharing ratio. This profit sharing ratio is given as 5:3:2. That 12,000, when it is divided, here it is to be given back to partners. That means the partners account will be credited. That is, when you divide the 12,000 in 5:3:2, it works out to 6,000, 3,600, 2,400. First partner X, he has to give to the company 6,000 and he has to receive 6,000. So there is no adjustment. In case of partner Y, he has to give the company firm 4,000. He has to receive 3,600. That is 4,000 he has to give. He has to receive 3,600. 600. That means his account has to be debited with 400. That is, he has to give extra money to the firm than what he is supposed to receive. In case of Z, the partner has to give back to the company 2000. That is received from the partner is 2000, and he has to be given 2400. So the difference amount 2400, 2000, he has to receive 400 to be credited to his account. In case of partner Z, he is to be given 2400. He is supposed to receive 2400, but he has to give only 2000 to the company. So his account excess of 400 is to be credited. Now making the adjustment entry for this, that what we have to do is we have to credit the Z account and debit the Y, and it is to be made in the current account for the reason that it is given in the question. They are maintaining fixed capital method. So all the adjustment are made to current account. Both the partners are adjusted for an amount of 400. So adjustments made. Again, one more question on past adjustments. Here we are given with the details about the three partners where they are maintaining the capitals on fixed capital method. So they will be maintaining two accounts. One is the capital account, the other one is the current account. Breaking down the question details, ABC are partners and they are sharing the profits and losses in the ratio of 2:1. Their fixed capitals are 1,80,000 and 70,000 for the year ended 31st March. Interest on capital was credited at 9% instead of 12%. This is the bottom line of the question. That is, the partners are entitled to receive 12% interest on capital, but they were given only 9%. That is, less percentage was given. In the previous question, excess percentage was given. Now less percentage was given. And we are asked to make the working notes for all these points and prepare the adjustment journal entry. This is what we are required to do. Now let us start our workings by preparing the working note. This working note is made for the estimation of adjustments to be made. Now, it was said that the partners were wrongly credited at 9%. So, wrong percentage was 9%. And they should have been credited with 12%. That is, the correct percentage is 12%. Therefore, that is 3%. The difference of these 2%, 12% less 9%, 3% interest on capital was given less to partners. Now to make the adjustments, this 3% has to be, given to partners now. And since this 3% was given less to the partners, this amount would have been with the firm, and the firm would have distributed this amount to the partners as a part of their profit in the profit sharing ratio. So this amount was included and given to the partners in the profit sharing ratio. So this amount is to be received back from partners in their profit sharing ratio. The profit sharing ratio is given in the question as 2:1. It is to be received in the ratio of 2:1. It is given in the question itself. Now, based on these points, let us prepare the table for making the adjustment, for finding out the adjustment. The capitals are given for the three partners. Capitals as 1 lakh and 80,000, 70,000. The partners were given less, that is, these partners were given a lesser percentage. Given less. How much? 3%. This is to be given back to the partners. They were given less and it is to be given back to the partners. So given 3% less is to be given to partners. Given to this 3%, they were previously they were given less. So now we have to calculate this 3% and give it to the partners. That is 3% of 1 lakh, 3,000. Here it is 2,400. Here it is 2,100. This total amounting to rupees 7,500. This 7,500, the partners already received it in the proportion of profit sharing ratio. So it is to be received back from the partners. This 7,000 is to be received back from partners. Received back from the partners in their profit sharing ratio. In the profit sharing ratio, it is to be received back from the partners. So that is to be received back in profit sharing ratio. In profit sharing ratio. That is, the profit sharing ratio is given in the question as 2:1. That 7,500 is to be received back from the partners in the profit sharing ratio. So when 7,500 is divided in the ratio of 2:1, it is 3,000, 3,000 and 1,500. Now in case of partner A, he has to be given 3,000 and 3,000 has to be received from him. So there is no adjustment in case of partner A. In case of partner B, he has to be given 2,400 and he has to give to the firm. That is, the firm has to receive back rupees 3,000. That is the difference amount of 3,000 minus 2,400. It is to be, this amount of 600 is to be debited to his account because the partner has received extra money than what he is supposed to. So it is to be debited 600. In the case of partner C, he has to be given 2,100, but he has to give back to the firm only 1,500. That is the difference amount of 2,100 less 1,500. That is, this rupees 600 is to be credited to his account for the reason that he has to be given extra 2,100, but he has to return only 1,500. So adjusting this amount, 600 is to be credited to partner C. Now making this as a journal entry. B's account, B's, remember they are maintaining fixed capital method. So two accounts, adjustments to be transferred to current accounts. B's current account data to C's current account being adjustments made. That is, partner B is getting a debit of 600 and partner C is getting a credit of 600. This is how the adjustments are made. Okay students, let us continue few more practical problems in this chapter in our next video. Your like, share, comment and subscription to channel may encourage me to post more videos in accountancy and other subjects. Thanks for watching.